Most retail traders lose money in the Forex market. One of the biggest reasons is that they focus entirely on charts while ignoring the forces that actually drive prices. That is where fundamental analysis comes in. Fundamental analysis is the study of economic, political, and social factors that influence a currency's value. Instead of reading patterns on a chart, you are reading the health of an economy. The goal is to understand why a currency might strengthen or weaken, not just when. Here is something that makes Forex unique. Every currency pair represents two economies at once. When you trade EUR/USD, you are comparing the Eurozone's economic health against the United States. You need to understand both sides to form a clear view. So what do you actually look at? Economic data releases are the foundation. These are official reports published by governments and central banks on a regular schedule. The ones that move markets most are GDP, which measures total economic output, and inflation data, particularly the Consumer Price Index, which central banks watch closely when setting interest rates. You also want to follow employment reports like the U.S. non-farm payrolls, retail sales figures, and business activity surveys known as PMIs. Each of these gives you a snapshot of how an economy is performing. Central banks sit at the core of fundamental analysis. The U.S. Federal Reserve, the European Central Bank, the Bank of England. These institutions set interest rate policy, and their decisions directly move currency prices. When a central bank raises rates, foreign capital tends to flow in, pushing the currency higher. When rates are cut, the opposite often happens. But it is not just the decisions themselves. The language in speeches and policy statements can shift market expectations before any vote is even taken. Politics matters too. Elections, trade disputes, and geopolitical instability can send a currency sharply lower as investors move towards safety. The British pound's behavior around the Brexit referendum is a clear example of how political events can dominate a currency for months. Now, fundamental analysis does not replace technical analysis. Many experienced traders use both. Fundamentals help you decide what to trade. Technicals can help you decide when. Neither approach is a guarantee. The market can behave unexpectedly even when the economic picture looks obvious. Risk management is non-negotiable, and you should never trade with money you cannot afford to lose. The practical place to start is simple. Pick one or two currency pairs. Follow an economic calendar so you know when major data is released. Watch how prices react to that data in real time. A demo account at zenithfx.com lets you do exactly that without any financial risk. Watch the data, understand the context, then form a view.